How's it going, everyone? And welcome back as always to Continues to Tick, the YouTube channel where we take a focus on the passing of time, along with discussing the utilization of this time as we continue onward with life, and more specifically the documentation of growing up a dividend portfolio, along with routinely touching on the much needed mindset of a dividend investor. As you saw by the title of this week's video though, we had a rather red week, to say the least. And it appears at least that if you just happen to not be investing into the smoking quote-unquote meme stocks or be heavy in tech, you may have had a rather interesting week as well. But with this said, in this week's video, although I happen to take a nice refreshing dip into the Red Sea, I let you know why I carry on, all business as usual. However, before we head down that path, if you've enjoyed this journey so far, the journey of systematically growing up this dividend portfolio, hit that like button. And do please, of course, consider subscribing if you haven't yet already. I plan for this journey to be a long one. And now with the continued consistency, and maybe once the markets turn, or not, we'll soon force our weekly deposits to the 30K mark and be that much closer to the goal for the year, which is to reach the portfolio size of $40,000. But first, as a side note, did you know it was officially the start of summer this past weekend? I mean, to me, that's pretty crazy. I mean, California did top 110 plus, so it's been feeling like summer, but it hasn't reached summer yet. But wow, I feel like I was literally just speaking to you guys about the beginning of the year and the crazy wild start to 2021, or about trying to get the 2020 taste out of my mouth. If you didn't already know, it's officially summer, and yes, as even continued evidence, time passes by quickly. Before you know, I'll be like, look, it's now the beginning of fall of 2021. So as I mentioned earlier, whether I wanted to or not, and trust me, unless I have a substantial amount of cash on the sidelines, I don't want to take a dip into the Red Sea. It doesn't tend to help with the psyche. As you can see here in the past week's performance, we lost quite a bit of ground. I mean, it was last week where I just had said, as long as we remain flat, we'd cross the 29K mark, but instead, we lost a total of $1,157. Which is a noticeable amount. But if you happen to follow the Dow Jones, which I view as a nice umbrella of the overall market, they had an active hemorrhage as well, starting out 5 days ago, for the week at $34,472 and ending, as you can see here, at $33,290. But it goes without saying, a little bit of resemblance there. Now, I'm not trying to sound pessimistic, at least for dividend investors, I like to think, as it doesn't matter what the markets do in the present day, at least not as much as it does for alternative investing strategies. For us, we still get paid dividends, and as long as there are no pay cuts, the world continues to spin in a rather mundane pattern. At least our portfolios do, that is, leaving us overall unaffected. In saying this is a big reason why saving money in a 401k as a sole retirement plan is a rather risky play, although done right, as it's hard to time the market. I mean, can you imagine utilizing the 4% rule one day and working so hard to build up this particular nest egg and needing to take out money in a red week or in a soured market, needing to sell more shares for less money, then having less shares and a smaller portfolio? To me, that's pretty painful. Now, I'm not trying to portray dividend investing as the sole and best investing strategy out there either. There are indeed a variety of investing strategies out there, but I chose this one in particular for various reasons. But with one in particular, living my day-to-day with a bigger peace of mind. But the one thing I can say is that although I saw the Red Sea up and personal this last week, I routinely remind myself of the vision, and due to this I remain rather unaffected when things tend to turn. I remind myself that none of my holdings experienced any slashes or pay cuts. Companies remained paying me my owed and scheduled dividend payouts. And further still, the time horizon for my strategy is a long one, meaning if it continues to decline, this just means next week when I go to automatically invest, I'll be buying more shares for a cheaper price, aka dollar cost averaging. As I have said before, and will often say and say again, when investing strictly for dividends, any market gain experienced is a cherry on top. And one of the best things a sole dividend investor can do is look at it in that light. It's not the end goal. If you're building up a portfolio for dividends, the end goal isn't necessarily to sell the whole portfolio by the end of the journey. Although you can, and you probably will have a pretty good cash pillow if you were to sell it all at the end. But the end goal is to be paid dividends, activate the drip, meaning letting compounding take effect over time. And the key here is over time, allowing money to make more money on your behalf. Because when you get paid dividends and then you go in and reinvest these dividends, you're now investing with money that wasn't even yours to begin with. And I must say, there were various reasons as to why the market reacted the way it did this last week, although still remaining rather unpredictable. But as the journey is long with dividends, don't lose sight of the vision, your starting goal. Keep it alive, no matter how discouraging it may appear visually. Just know underneath, as you build, you're building as solid of a financial foundation as they come. And although it takes time, time is one thing that we have available to us to utilize. Use it correctly, and it will eventually show. Where on the other hand, utilize time incorrectly, and again, it will also eventually show. And just before we go into the activity section for this past week, just so you can see, we are now back to the sub 30% return mark with a portfolio size of $28,197. And this equates to a portfolio gain, market gain that is, of $3,148, and from earned dividends of $379. And just because as I show the good times, I will also be transparent with you with the quote-unquote bad times down below here. So we still happen to see the green lawn, but if we go back here to the last week's performance and then we go down, we can see we took a really big hit here. With my ETF and financials, it appears to be taking the biggest hits. And making our way further into wrapping up this week's video, here we are in the activity section for this last week, as I was mentioning earlier. Although we don't have much to hang the hat on per se, in terms of flashy market gain, we continue to receive as scheduled our dividend payouts for this past week. Here we are starting off on June 14th, getting paid $2.33 from 3M. Then on the next day, getting paid from McDonald's $1.51, and NextEra Energy $1.42, and of course from O $3.10. And then on June 16th, we got paid from Duke Energy Core $2.96, while also on June 16th, having our automatic deposit of $500 get funneled into the portfolio, just like we do every single week as part of our investing strategy. And here we are on June 16th with a pretty good, flashy snowball size, I must say, of $28.33. So although I can definitely have complaints with the overall market gain of the portfolio, if I continually view it as just a cherry on top and continue to focus on my dividend payouts and making sure that the companies I hold are continuing to pay dividends or increasing the dividends and not slashing them, we're going to be okay. And just continue to think long term. Think of your vision. If you're investing for dividends strictly, then strictly invest for dividends. The important key here is just to remember what your strategy is in the first place and try your best to stick to it. Sometimes it can definitely be tempting to reconsider some other strategies along the way. But there's a chance and a risk that once that tends to happen, we start losing sight of our initial or overall investing strategy. But just know if you're investing for dividends and you had a down portfolio this last week, just as I did here, we're going to be fine. Although it's fun to focus on the today and now when it comes to seeing your money on a screen, the thing that gets me most excited is thinking about the future of the portfolio and the long-term vision of where it's headed and where I think, personally, it will be. We made it through 7 days, which is good. We can make it through another 7 days here as we make our way through the week. And this journey's been fun, and I'm looking forward to seeing you guys on next week's video. And until then, as always, take care.